Time for the word on Wall Street. Top investors watching your money this morning. Joining me now, Laffer Jr. Investments President Arthur Laffer Jr., Markowski Investments President Chris Markowski, and the Fitz-Gerald Group Principal Keith Fitz-Gerald. Arthur, let me start with you. Futures are searching for direction this morning. We're waiting for the Federal Reserve minutes from December, from that meeting, out in just a few hours. The minutes could give investors a better picture of where these policymakers see interest rates going in 2022. Fed officials forecasting 3 interest rate hikes by the end of the year. You say the Fed, Arthur, is taking a wait-and-see approach to inflation. How dangerous is that?
Well, if inflation doesn't slow down, it's going to be a problem because then they're going to have to act a little bit more aggressively. But the Fed's a political animal, so this is what you should expect from them. They're going to wait and see what CPI looks like in December and January 1st before they give us an indication whether you're looking at 2 or 3 hikes. I think is probably more likely.
Because it seems to, we had a guest on last hour who thinks that it will be. The Fed will be less aggressive at reining in inflation because growth will be weak. But are investors, like the Fed historically makes mistakes when they try to remove accommodation. And do you see that in the cards, particularly when you have asset inflation, asset bubbles here, there, and everywhere?
Yeah, definitely. I mean, the Fed has historically not acted ahead of the market. What they do is they really don't want to take off the gas. They like the gas in the economy, they like being accommodative on credit. So, and also this Fed's a lot more dovish than it was before. The new membership really gives it even more of a dovish tilt to it. So, it took them how long to take transitory out. They're going to really wait until they really think the fire's going on inflation, if that's the case. So, yeah, I wouldn't expect this Fed to be aggressive at all.
Keith, you say inflation splits are here. Investors dump tech stocks like Apple, Microsoft, and Tesla. You say this is a bad move. Why?
Well, I think that you got to think about it logically. Tech is improving every aspect of our lives. They're changing the way they eat. They're changing the way they drive. They're changing how they think about buying houses. But nobody that I know of is giving up their iPhone. Nobody's giving up their wearables. Tech is increasing medical technology. 91% of investors or executives think it's a primary investing area. 82% think AI is there. Cybercrime is already so big that if it were a country, it'd be the world's 3rd largest GDP. Microsoft, Apple, up 500% in the last 5 years. Do you want to switch horses in the middle of a race if you're winning? I don't think so.
Chris, we learned a record 4.5 million workers quit their jobs in November. Job openings did fall from about 11 million to 10.6 million. This, as the December jobs report is coming out on Friday. What are you expecting, and what's the impact from the jobs report, but what's the impact on the market?
Well, the impact on the overall market, right now is basically muted to some degree. We've obviously seen the markets rise, the old Santa Claus rally coming up. I'm looking more to what's happening in the future. You just did a story. We're talking about Chicago school districts shutting down. What does that mean to all the parents out there that have to scramble, that can't go to work? This great resignation could continue moving forward. And I know it's anecdotal, but many of my clients are small business owners all around the country, and they are having a really difficult time finding workers. And yeah, there's certain areas of the country had a real tough time. New Year's Eve shutdowns in the Northeast and some of these urban areas. But this is going to start, morphing into other areas of the country as well. This to make it more difficult moving forward.
But wouldn't it be temporary, and the market would probably look past that?
Well, I think the markets are looking pretty much past everything, at this point in time. You're taking a look at what's going on and what has happened via the Santa Claus rally. I think the markets are trying to see what the Fed is going to be doing moving forward. We get the minutes coming out a little bit later on today. But even with the Fed, I highly doubt that they're going to really do much outside of 75 basis points this year, which basically is akin to cutting your grass with a pair of scissors. Right.
You're still staring at a balance sheet about almost $9 trillion. What, before the financial crisis in 2008, it was 800 billion. Really astonishing. Thank you, gentlemen. Chris, what were you going to say before we go?
No, I was just going to say, what can the Fed do? Our national debt is almost $30 trillion. Can they really raise rates? I mean, they're stuck in a box.
Keith, you're shaking your head.
The Fed is so far out to lunch, they're an insult to the cafeteria, Dagan.
I will leave it at that, Keith, because I can't top it. Keith Fitz-Gerald, Chris Markowski, and Arthur Laffer Jr. Great to see you, gentlemen. Thank you.